At the very end of 2022, Gumroad, a platform to help creators sell digital products easily, announced that they are increasing their prices to a standard fee of 10%. If you've been around any creator communities in the past few weeks, you have probably heard about it. Personally, I've used Gumroad very lightly in the past year and did not know about all the other controversies that Gumroad has had in the past. So in this video, I want to do a bit of a deep dive into Gumroad and its history, the controversies around it, and try to figure out what the future of Gumroad is. So without further ado, let's jump into the basic history of Gumroad. If you've never used Gumroad before, Gumroad allows anyone to sell pretty much anything very quickly. One of the main benefits that you'll hear from creators is that the checkout process is super simple and quick, especially if the person buying from the creator already has a Gumroad account. Simple, quick product links has been a main value proposition for Gumroad throughout its entire lifetime. Some common examples that you'll see with Gumroad are Notion templates, ebooks, or courses. The founder of Gumroad is Sahil Lavinga, who was the second employee at Pinterest. According to Sahil, Gumroad was a weekend project and gained a lot of traction very early on, with over 52,000 people checking it out on the very first day just by posting it on Hacker News. That led to Gumroad being able to raise $1.1 million and Sahil believing the company could become a billion-dollar company. It was a company that Sahil believed he would work at for his entire life. For some context, Sahil was only 19 when he raised over $1 million for Gumroad. Gumroad continued to have success after the raise, but the growth of Gumroad eventually stalled and plateaued. The creator economy is only so big and is still in its infancy. Since they were venture-backed, just plateauing wasn't really an option. Gumroad needed to be able to raise a Series B round, but wasn't able to even with trying different avenues to expand its market size. To keep Gumroad going, they eventually had to lay off the entire team essentially, and Sahil was the only employee for a bit. They went from 20 employees to 5, then to only Sahil. By 2017, Gumroad stayed in operation, but investors started to write off Gumroad as a loss. It was clearly not going to be a billion-dollar company as hoped, so for investors, the decision to write this off as a loss was super easy. However, Gumroad was going to continue. Sahil was able to buy back stock from investors for as low as $1. By 2018-ish, from my own cloudy understanding here, Sahil basically owns the majority of the company, with buybacks and his team not owning their options any longer. Sahil gets back up from this craziness and runs Gumroad by himself. It's back to growing and the hype train is back for Gumroad. Then enter the new Reg CF regulations that allowed a company to raise up to $5 million in equity crowdfunding. When those regulations went live, Gumroad raised $5 million in less than 24 hours on Republic. In late 2022, Gumroad decided it was not operating in a financially sustainable way. According to Sahil, it needed to completely change its fee structure from a tiered system where the more you sold, the less percentage Gumroad took from you to a structure where it was just a flat fee of 10%. Yeah, this has been a wild ride and this all might be a bit confusing. So let's dive into the controversies a little bit deeper. The first controversy, being able to buy back stock from investors for as low as $1. For investors, this was not a big deal. Investments for VCs go to $0 all the time. It's much easier from an accounting and operational standpoint to call it zero rather than having to check in on it all the time and not being able to write the loss off. What's controversial though is that Sahil was able to clean the cap table up and have more ownership for himself. This is all while the assets that he and his team built are still there. The audience and product that Gumroad had was all intact. As Nathan Barry, the founder and CEO of ConvertKit, put it, this time he got to restart with everything that $10 million and 25 employees built, but without that on the cap table. It's not illegal what Sahil did, but it does feel highly unethical. The team that was on the first version of Gumroad did not have any ownership in Gumroad because they didn't exercise their employee options in a timely manner. Yes, employee options were a broken system at Gumroad, which was not uncommon for startups at this point in time, but it does feel like Sahil owed his former team for what they had built with him. They were told or assumed Gumroad was not ever going to be a big deal when they were leaving the company. There was no point in exercising their options. The second controversy, raising $5 million on Republic. As I mentioned earlier, Gumroad raised $5 million on the equity crowdfunding site Republic in March of 2021. Again, not illegal to raise money like this, especially if people are willing to invest in Gumroad like this. But it does feel really odd based on the previous information about the team not owning anything and a whole group of investors already writing their investments to $0 essentially. Now, yes, there's definitely a world where you can sell equity to investors in equity crowdfunding and pay dividends to shareholders. However, Gumroad did not sell equity in that manner. They sold shares through a SAFE. A SAFE stands for Simple Agreement for Future Equity. If you know of a convertible note, it's a simpler version of a convertible note and was developed by the Y Combinator team. A SAFE in this instance doesn't feel right since investors will only get their money back when Gumroad is sold essentially. Investors from Republic do not have equity yet in Gumroad, so there's no way for them to receive dividends at the moment. Time out. One thing I learned after recording the main part of this video is that actually SAFE holders in the equity crowdfunding round on Republic can actually be paid dividends according to Sahil in his YouTube comments. Now, what that actually looks like in practicality, don't know, TBD. So that is kind of interesting is because paying dividends off of a SAFE is not normal. Now, do I feel a little better? Sure. But that's still not great because it'd been much easier just to sell equity. Timeout over, we're back. The SAFE agreement doesn't seem right. You can't just say we're not taking to the moon strategy, but still use the same investment instruments as those actually shooting for the moon. The third controversy, raising pricing to a flat fee of 10%. The last controversy is one that is still playing out. Sahil has a lot of reasons why they needed to make this fee increase. It could be very true that Gumroad is not financially sustainable with their tiered model of pricing. However, Sahil talks about interest rates and how others are just being subsidized by venture capital right now, and that they won't be the only creator economy platform that has to increase their pricing. That could be true for some. However, that definitely is not true for some of Gumroad's main competitors. ConvertKit, that was born out of Gumroad's shortcomings, has no venture capital backing and has very reasonable fees and is sustainable. How do I know they're sustainable? They have a public live dashboard of their numbers. The future of Gumroad is going to be a fascinating one. Eventually, it feels like this is all going to lead to a not so great end for Gumroad, or at least more people are going to be hurt by it. Personally, I'm super confused by Sahil's comments in his latest public board meeting when he basically said, we'll IPO if there's an opportunity, but we're bootstrapping. I guess that could happen, but Sahil, you have real investors. You're not a bootstrapped company. You can't just have them hand you money and never give them a return on it. Or give them a return, but it's so late that it doesn't even matter anymore. For creators, I don't see how Gumroad is a main platform, especially for those that are making serious money. A 10% fee is wild. Yes, Gumroad can compare itself to eBay where it has fees in the 10% range, but Gumroad is not the same type of marketplace. Plus, if Gumroad shares your product out and it's sold through a Gumroad avenue, it's an additional 10% fee. You could sell a product and have a 20% fee come out of it. When comparing to similar tools like ConvertKit or Lemon Squeezy, Gumroad can't compete on pricing at all. Gumroad would have to be able to drive a ton of traffic to creators, which could happen, but I don't think Gumroad can do that just yet. The only example I can think of that has done this type of pricing model and awareness is Udemy. Udemy has some subscriptions though and can sell everything on Udemy for one price to individuals and corporates. I don't see how Gumroad can pull that off. It's going to be interesting to see what the future of Gumroad is, but I'm skeptical that this experiment will work. If you found this video helpful, I would love it if you can give it a like. And if you're looking for more content like this, you can check out other videos on this channel like this one here.